Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is July 26th, Friday, last Friday of the month and last trading session for the week. And of course, that follows ECB's interest rate decision. They held rates unchanged, plus of course, Draghi's speech. Now, holding rates was seen as very positive for the euro dollar, because there were market expectations that the ECB is going to cut as soon as yesterday, okay? But those investors, of course, were mistaken. Draghi reiterated some of his previous dovishness on his message, but was not as dovish as before, okay? And that, of course, revealed some sort of lack of uncertainty about future guidance, not being as negative, so that also has supported the euro. Now, the truth is, the US is likely to cut next week, right? 25 basis points. Now, the ECB is not going to cut next week. There is no meeting. The last meeting was this. Now we're looking at September, and probably a rate cut won't even happen until, I mean, as big as the US cut, right, won't happen until the first quarter of 2020 and even further down the line. So I believe that that is going to support the euro, okay, in the short, medium term. Now, the question to ask is whether Mr. US GDP is going to come out worse than expected today. This is a very critical point for both the US and euro performance. Why? Because euro dollar is at 111 psychological level, okay, very strong support. If the US GDP comes out worse than expected, and considering that the Fed is going to cut next week, then we're really looking at these bounds to be, you know, for euro dollar to break to fresh highs, and that would be the low for this year. Now, if the GDP comes out better than expected, we're still seeing another move to the downside. But then again, because the Fed will come in, will step in, I'm seeing the euro dollar moving a little bit higher again. Now, let's move to the chart so I can explain what I am seeing. Although my view changed, obviously, because now we've moved to this low, okay, creating a triple bottom down here. I was expecting 1, 2, and then 3, 4, 5, as you all know. Now, obviously, we have this correction over here. Okay, and I would be expecting prices to move up now. That would be wave 1, wave 2, wave 3, wave 4, and wave 5. We're looking at least 116. The truth is, are we going to see that acting as the last resort for bears? Well, as I said, it really depends on the fundamentals. If we get a good GDP, prices are going to move lower for a 110.65 or so correction, and then start looking up once the Fed steps in. If the GDP comes out worse than expected, then we're looking at this acting as the last resort for bears, and then we're looking at this being 1, 2, 3, 4, 5, ending down here instead of 3. That would be wave 1, 2, 3, 4, 5. We just want to see the break above that level. Okay, so both cases are in play. Down on the 1 hour, things are a bit more clear, okay? So we've had 1, 2, 3, 4, I'm seeing that as, right, 5, which could be truncated, to be honest. We can still looking at labeling this as that, as it is. Or we could be looking at 1, 2, 3, 4, and 5. And that's A, B, C. Maybe turn out to be a triangle with a throwback and then prices move up. Or because the US GDP is today, that might be actually, you know, be the bottom, to be honest, of the correction. Wave 1, wave 2, we expect wave 3 to break above the 111.80 or so, then 4 and 5 to break above this trend line. That's on the euro dollar. Now, dollar, yen, I don't see much difference, although the view changes a little bit because signals are a bit more mixed. I'm still waiting for wave C to break below the 106.78 and aim 105.5 or so. Okay, we are in a impulsive move, and at the moment we are correcting for wave 4. Okay. Down on the 4-hour, we are moving within a ascending channel, right? Now we've had this correction over here, another correction over here, and that could be 1, 2, 3, 4, 5, ending there, and then we're looking at sales, but the maximum I see going up to is the 10941, okay, 42 or whatever. Now, of course, that could simply be an A, B, C correction as well, right? So A, B, C with prices moving lower around that level. If that stops and prices start moving lower, breaking this level first and then that, then we're just looking for the break of 106.78 and heading to 105 or so. So there's different scenarios here in the play as well. Down on the 1 hour, okay, my view before was this: wave 1, wave 2, and we'll go for 3, 4, and 5. Okay, now we are still okay with this, but if prices move higher than that level, then that would be invalidated. Okay, so probably looking for this, instead of being an impulsive 1, 2, 3, 4, 5 to the downside, that's an A, B, C correction. Okay, and then we're looking for prices to start moving lower. Okay, so that means we can expect a further move to the upside, because that wave, it really looks like quite impulsive, although as wave C of a bearish correction. Okay, so that is all for the day. Euro dollar is actually, I think, a bit more clear. The view is more clear. Dollar yen is a bit mixed, but we have two scenarios. One would be that we stop right here, continue for wave 3. The other one would be like we're going up for wave 5, which is the C, 5 of C, right? And then we start moving lower. Obviously, if we break above this trend line, right, then you're looking at this being invalidated completely, so the bulls will take over. That will be purely on yen flows rather than dollar flows, though. So I want to thank you for being with us for another day. And I want to remind you, as always, to visit our blog, where we'll cover the latest news, Paris, trading ideas, and all the necessary tools traders need.